What's up, traders? In this video, I'm going to be breaking down the settings menu for my latest version of the Ultimate Pullback Indicator. So the Ultimate Pullback Indicator is a script that I've been working on since I began trading in 2017. I have been working on it actively for all of this time, and I've been improving it over those years based on things I've learned about trading and PineScript, obviously. And this latest version is updated to PineScript version 5. It includes a bunch of new enhancements, improvements. It includes automated trading functionality through AutoView and PineConnector. It has everything you could ever want out of a pullback indicator. And if it doesn't have everything you want and you subscribe to it, shoot me an email and maybe I can add that feature to it. But in this video, I'm just going to be breaking down the settings menu, the various options you have to use with this indicator. This video is intended for free trial members and paid users of this indicator to guide them through what all the settings do. So if you're not into that, if you're not interested in this indicator, you might not find this video very interesting. But if you are a PineScripter, someone who is interested in learning PineScript, you might just want to watch this video for ideas to implement into your own scripts, because there are some pretty cool features in this script. The reason why I am charging money for this script is, one, it takes me a lot of time to maintain and update, and I've spent a lot of time on this script. I've exerted all of my expertise into this script, basically, all of my knowledge about trading, particularly this style of trading, pullbacks, momentum, trend continuation trading, and PineScript. This is a script that I use in my own trading. I've currently been running it for 2 or 3 months now, automating my trading through PineConnector, and it has been profitable for me. I'm not saying it will be for you, depending on the settings you select, but it has proven itself to me, and I'm ready to release this new update. Before we begin, I'll show you a quick glimpse of the source code to give you an idea of how much effort and time has gone into this script, this project of mine. There are 3 scripts that accompany it, technically 2 that you get access to, and 1 brand new library script that uses features of PineScript 5 that if you're not a PineScript coder, you won't be interested in that. So in short, this is a trading tool. It's intended to assist in your trading. I use it in my own trading to assist in my trading, both manual and automated trading. It also generates alerts, things like that, to help me manage my positions. Anyway, that's all I had to say. Let's get into the video. Now, I'm not going to lie, there is a lot to cover here on this indicator. It's a very advanced indicator script with a lot of different bells and whistles and features. I would just encourage you to stick to what you know and only experiment once you get comfortable with the indicator. You don't need to adjust any of the settings to use this. The default settings should be fine on a lot of markets out there. For the most part, I use this indicator in my own trading with the default settings. That's why I've made them the default settings. But if you do want to get experimental and creative and start testing different variations of the techniques that this indicator employs, I definitely encourage you to do that. There are hundreds of ways to trade this indicator, this strategy, profitably. Certainly thousands of ways to trade it unprofitably. But there are at least dozens to hundreds of ways that you could set this indicator up in totally different configurations for different markets and timeframes and find it to be profitable. One word of caution would be, don't overwhelm yourself. Don't go down the rabbit hole of over-optimization. I do get emails sometimes from traders where they are just trying to do too much with this indicator just because they can. In trading, less is more, simple is better. Just because you can use all of these settings and tweak them and change them doesn't mean you should. I would only tweak a few at a time. And keep in mind that you're trying to make a strategy that is robust across multiple markets, not one that is perfect for a single market. That is a road to insanity, quite frankly. If you spend too much time optimizing a strategy for a single market and time frame, you can send yourself crazy and you'll never find profitability. In trading, sometimes good enough is good enough. Don't spend your life searching for the perfect setup. Just find one that is profitable within your risk tolerance, that makes a decent return and performs in a way that you're comfortable with, and then just trade that for a while. And then maybe over time, you'll come up with different ways to improve your approach. And maybe then you should come back and experiment with adjusting some of these settings. Personally, I keep this simple. I trade it with basically just a 1-to-1 target and 2 positions, and I trail my stop loss on my second position. That's the common way I trade this. Sometimes I'll trade it with one position and shoot for a greater than 1-to-1 risk reward profile, depending on the market and time frame and market conditions. But anyway, that's my advice for this script. And I'll go into more detail in other lessons on techniques and profitable trading approaches with this indicator that you can use and explore. So let's open up the settings menu. If I click on this little cog here, that'll open up the settings interface. And this is with the default settings on. So the first thing to note is that all of the settings are organized into categories. So up the top here, we have our display settings, and all of these settings control what draws onto our chart. So we have draw P&L labels here. This is what controls our profit and loss labels. If I turn that off, these labels go away. And these labels show how many pips the trade won or lost. So if I turn that back on and I hover over this label, you can see it tells me how many bars I was in the trade for, what my max adverse excursion was in pips, and a percentage. So MAE and MFE, a max adverse excursion and max favorable excursion. That's basically just how far price went against us before hitting our profit target in the case of an MAE. And in the MFE, the max favorable excursion, it's how far price went in our favor before turning around and stopping us out. These are useful metrics to track in your backtesting to give you an idea of whether you're giving your trades too much room to breathe or too little room to breathe. But you can turn these off if you don't want to see them by clicking on this checkbox here. You can also turn off your stop loss size, so you can turn all the labels off if you want to, and then the script will look like that. It's a little bit cleaner, but less information. I normally leave these on, especially if I'm backtesting. Next up, we have draw extended stops and targets. This just draws your stop loss and your take profit until one of them is hit. So if I zoom out a bit, here's a good example. The script kept drawing our take profit all the way until this bar here hit it. Also useful for backtesting. Next, we have our draw backtester results. So if I turn this on, this will turn on the inbuilt backtester system. So in this indicator version of the UPI, I've built out a custom backtester system. And this system displays your starting balance, your return in dollars, your return in percentage, your max drawdown as a percentage, the pips that it returned, and the ending balance. Now, it's important to stress that this is a rough estimate, very rough guide. It doesn't take into consideration times when price gets really close to your stop loss and maybe stops you out based on the spread. So here's an example here. Even though this trade eventually lost, when price got this close to the stop loss right here, there is a chance, depending on the market you're trading, the time frame, and the spread, there is a chance that you might have been stopped out. But the script doesn't detect that because the script cannot know the spread of the current market. And so I've tried to make it as accurate as possible, but you need to factor in the possibility that a number of trades were actually losing trades, but the script recorded them as a winning trade. There are also occasions when price might have just tagged your take profit and the script recorded it as a win, but then price reversed and went on to stop you out for a loss or for break even. But the script doesn't record that. This is an unfortunate limitation of PineScript that we can't simulate the spread. So that is why I always strongly recommend that you backtest thoroughly, manually, and don't just blindly trust any script, but certainly not this backtester system here. That being said, I have done some testing, and this tester system does seem to be quite accurate on most markets and timeframes. I've only tested it on Forex markets, but aside from the small number of trades that may have been losing trades or may have been falsely recorded as winning trades, it seems pretty accurate. And the way it works is it simulates risking a percentage of your account balance on every trade that it detects. So if I open up the settings menu and I scroll down to the Backtester Settings category right here, here you can input your starting balance and your risk per trade. So by default, it's risking 1% per trade, but if I wanted to, I could bump this up to, let's say, 2%. And you can see how the simulator, the Backtester simulator, would have performed with that level of risk. We also have in the top right here, our performance stats, and that is this setting here. So if you don't want either of these on your chart, you can turn them both off. You can also change the location of the stats display. So using this drop down here, TR stands for top right, bottom right, and bottom left. So if you wanted to, you could move it to the bottom left, for example, and the display will move down here. You can also turn on a bunch of extra stats here if you want to. So we could see our break-even rate, our win-loss rate for long and shorts, and our max adverse excursion and max favorable excursion. So this is what it would look like to have all the stats turned on. Now, I'm not going to go over all of the settings in detail because each setting does have a little tooltip here that explains what it does. If you hover your mouse over these little eye information icons, there is a tooltip that will explain what that setting does. But I'll quickly scroll through the settings and explain what each section does. So here's our stops and targets section. You can change your stop loss to a fixed pip amount. By default, it's disabled. If you change this to any number other than 0, then your stop loss will be a fixed pip distance from your entry instead of an ATR based stop, which is the default setting. So by default, we have a 1 ATR stop loss, which means the script calculates the distance from your entry to the swing high, the recent swing high of the setup, and then adds 1 ATR to that distance to get your stop loss price. But obviously you can change this if you want to. You could have a tighter stop, or you could have a wider stop. It's worth playing around with this on different markets and time frames. For example, on a daily chart, you might want a much tighter stop loss than on an intraday chart. So you can control your stop loss and targets under this section. You can also control your risk reward profile here. By default, it's set to a 1-to-1, but you can change that here. You can set your break-even distance. So for example, if I wanted to, I could set my risk reward to 2-to-1 and my break-even to 1-to-1. Here is an example of a trade being stopped out for break-even. So we entered short here, stop loss was up here, price came down to hit our 1-to-1 break-even target, which is the blue line, and then our stop loss came down to break-even, and then this bar here came up to stop us out for break-even and has a blue cross above it to indicate that that was the case. So that's our basic stop loss and risk reward settings. You can also adjust your minimum risk reward to pullback origin. Let me reset these first of all. What this setting does is it's a filter that filters out any trades that do not meet the minimum requirement of the minimum risk reward profile to the pullback origin. And the pullback origin is the lowest body of the recent pullback. So we had an impulsive move down here from price action. We put in a new low. This was the wick of the low, but these candle bodies here is the pullback origin that the script references. You can change that though in the settings if you want to. You can change the pullback origin reference to wicks. So if I change that to wicks, then the script will use this as the pullback origin. And if you come up to the style section of the settings menu here, and you scroll down to the bottom of the settings, we have our bullish and bearish pullback plots here. They're all turned off by default, but if you want to see how the script is detecting pullbacks, you can turn these on. So if I turn bearish pullback close and bearish pullback low on, you can see now where the script is, or how the script is detecting lows in the pullback. So as price moves lower, the blue line represents the wicks, and then at the bottom, as price begins to pull back towards the moving average, the red line is our pullback origin body, and the blue line is our pullback origin wick. So turning this on is good for debugging and just seeing how the script detects pullbacks. It's not a perfect system. There are times, especially during consolidation, where the script will falsely detect pullbacks. There's not really any way around that. That's just a limitation of code in general. It's impossible to make a script that can read a market and all the nuances and subjectivity involved in a market like the human eye can. That's why I always encourage traders to use discretion when using this indicator. It can be automated profitably, and I am running this through PineConnector and automating my trading on this script using this strategy. But it does perform better and it is more accurate and more profitable if you trade it manually with discretion and you avoid any trades that do not look like a valid pullback. For example, here's a great example. Here, price pulls back, we get an entry here. That trade gets stopped out and then price moves back below the moving average and the script begins looking for another pullback. But we are basically in consolidation here. And then we detect another signal. This is an example of a signal I would not take. I would use my discretion to not take this signal because we are technically in consolidation, even though we've pulled back after a move below the moving average. Using my human eye, I can see that this is not an ideal setup. This is not a high quality pullback setup. And so I would not have taken this and I would have avoided this loss. If you're automating this script, it will just take this trade regardless. And even though it might be profitable to trade every signal blindly that this script detects, depending on the settings you've set up for the strategy, it's important to mention that the script is not 100% accurate and no script is when it comes to detecting market conditions. Anyway, moving on, let me show you what this minimum risk reward to pullback origin does. If I set this to 1-to-1 and we zoom out, you'll see a bunch of signals are taken away, are now ignored. And our win rate has dropped significantly. Our trade count has dropped significantly. The reason for that is the script is now only taking pullback trades where our target, our profit target from our entry falls above the low of the pullback. So in this case, the pullback origin is set to closing price. And so this red line needs to be beyond our take profit. And you can see that a whole bunch of trades here have now been invalidated through this actual trending market, because when a market is heavily trending, quite often it won't give you a 1-to-1 risk reward to the pullback origin. So that's something to keep in mind. But depending on the time frame you're trading, the market you're trading, you may want to filter trades based on the risk reward to the structure of the pullback. If I change this to wick, we'll get a lot more trades being detected, nearly double. And that will obviously affect your win rate as well. So I encourage you to play around with the filters and see what works best for you and the way you like to trade. So that's our stops and targets section. Next up is our moving average section. This is self-explanatory. You can select the moving average type you want. So there's all different types here. MA1 is your main moving average. You may find certain moving averages to be more profitable on certain markets and timeframes. So playing around with the moving average type and moving average length is a good idea in your testing. So here I've changed the moving average to a 100 period SMA, and it has affected our metrics a decent amount. There's also MA type 2, which is a filter moving average. So if I set this back to a 50 EMA, we could use a 200 SMA as a secondary filter. So now this big thick blue line is our 200 SMA, and now the script will only take long trades if the setup occurs above the 50 EMA and the 200 EMA. So any long trades that are detected below the 200 SMA but above the 50 EMA will not be considered valid. And same for short trades. The script will not take any short trades that occur below the 50 EMA but above the 200 EMA. So this is just another filter to try to keep you on the right side of momentum and the trend. Again, I encourage you to play around with this filter based on whichever markets and timeframes you're trading. To disable the second MA, just set it to a 0 length, and then the script will stop using it. Next, we have max candles beyond moving average. This determines how many candles are allowed to close above the moving average or below for long trades. So here's a good example. Here, price has made a move below the moving average. It's pulled back to the moving average, and we've had one candle close above it, and then we had our signal. If I were to set max candles beyond MA to 0, this setup will be invalidated because we've had one candle close above the moving average. There you can see it just disappeared. And so this setup is now invalidated. And that actually increased our win rate slightly. So this is another filter worth playing around in your testing. I find that allowing at least one candle to close beyond the moving average is a good happy medium. You do get some lower quality trades, but the increase in trade frequency tends to make up for that in terms of profitability. Next up, we have our consolidation look back and max consolidation count. This look back is how many bars to look left, how many bars to look back on, and this max consolidation count is how many times price can cross above and below the moving average. So the default settings are basically saying if price has crossed above and below the moving average 4 times over the past 10 bars, that will look like this. So 1 cross, 2 cross, 3 cross, 4 cross. If that has happened and then we get a pullback signal, the signal is invalidated because we've crossed the moving average too many times in recent price, and so we are likely consolidating. I find the default settings to be sufficient in eliminating most clearly bad trades around consolidation, but you may want to play around with this. But I like to leave it on 4. I found that worked across most markets on average, but depending on the market you're trading, you may want to play around with that filter as well. Next up, we have our candle patterns. So the script detects several different candle patterns. By default, it's only detecting engulfing candles. You can turn on or off long trades and short trades. So if you only want to trade long, you can turn off short trades, and then all short trades will be removed and the script will only trade long. And then you can also turn on a bunch of candle pattern settings. So this setting means that engulfing candles must engulf the wick. If I turn that on, any setup like this one down here, you can see that this setup here does not engulf the wick of the previous bar. So this bearish engulfing candle here engulfs the body of the bar, but not the wick. Whereas these setups do engulf the wick. So that's just another filter there. By default, it's turned off. You can also detect hammers and shooting stars. So this might be easier if I turn off engulfing candles and just turn these alternative patterns on one at a time. Here you can see a hammer candle was detected on the pullback. So it must still be a swing low to be considered valid. And there are certain rules that you can tweak about the hammer and star candles, such as it being green or red. Hammers and stars perform better on certain timeframes and markets, like all strategies and all setup patterns. Certain markets will perform better than others. So again, I encourage you to play around with the different candlestick patterns that the script can detect. So you can also turn on hammers and stars must match color. So hammers must be green and shooting stars must be red. That's just another filter there. We also can detect doji candles. So if I turn hammers off and turn dojis on, let's have a look for one. Here's one here. So here we have a swing high doji candle. And the way it detects a doji as valid or invalid is by default, using the default settings, the candle body must account for no more than 5% of the entire candle size from top wick to bottom wick. So if the candle body is 5% or less of the entire candle size, so the wicks must be a similar size to each other, then the doji is considered valid. And then we have another setting here, doji can be bullish and bearish. This is similar to the hammers and stars must match color. If you turn this on, then the doji candle for short trades must be red and the doji candle for long trades must be green. If you don't turn it on, then it can be any color. So if this was a green candle, it would still be considered a valid doji. And then finally, we have our detect fractal color change candles. So that sounds complicated, but really it's not. All we're looking for is a swing high candle that changes color against the pullback. So in the case of a bearish setup, we're looking for a price to make a new low, price to then pull back a few green candles, and then we're looking for a swing high candle that is bearish. That's the only rule for this setup. It doesn't need to be an engulfing candle. It doesn't need to be a hammer or star. It doesn't need to be a doji. It just needs to be red. And so you can see it also detected this doji candle. Since that was a swing high, that was red. So it's a very, very simple entry pattern, but it can be profitable on some time frames and markets, which is why I included it. There's also a final filter here for our candlestick patterns, which is must touch MA1, which is our main moving average. So if I turn on detect engulfing candles and turn this must touch MA1 on, and let me turn off our bullish and bearish pullbacks to tidy up the chart a little. Now the script is only taking trades that touch the moving average. So any trade that occurs too far from the moving average is considered invalid. So again, this is another filter that works quite well on some time frames. But let me turn that off and we'll move on to our candle settings. These are mostly self-explanatory and have information tooltips, so I'm not going to go into too much detail, but we can set the max candle size based on the ATR. So if the candle size is greater than 2.5 times the current ATR, it is invalidated by default, but you can tweak that here. The max rejection wick size for engulfing candles determines how large the rejection wick on the engulfing candle can be. Here's a good example. So the rejection wick for an engulfing candle is the opposite wick. It's not the rejection wick to the downside. That would make it a hammer candle. The rejection wick is in the opposite direction of the engulfing candle. So here we have a bullish engulfing candle that engulfs the body of the previous candle, but the rejection wick is quite large. If we were to turn the max rejection wick size to 1, that means that the rejection wick cannot be greater than the size of the candle body. So that trade gets invalidated there. That's just a filter that can enhance the accuracy of the trade, the trading setups on some markets and timeframes. By default, it's disabled and set to 0. Next, we have our star and hammer close. If I turn on hammers and stars, I'll show you what that means. So here's a hammer candle right here. The hammer and star close percentage is where the body must open and close in relation to the candle size. So if I bring out my Fibonacci tool, this is the best way to visualize this, and I drag from the low of this bar to the high. If I set it to 33.3, for example, so if I added 3.3 on the end of this number, that now means that in order for a hammer candle to be considered valid, the body must open and close above the 33.3% high, so the upper third of the total candle body or candle size. So for example, if you set this to 618, then the hammer candle could look something like this with a small wick on the bottom. So tweaking that number will change how the script detects hammers and stars. We also have the hammer and star minimum size as a multiplier of the ATR. So by default, the hammer and star candle must be at least 10% of the current ATR. This setting here just stops the script from detecting tiny hammers and stars. So a candle that looks like this in relation to recent price action would be too small to be considered a hammer. And so that filter there filters out any tiny hammers and stars. Then we have our doji size. Remember I said that doji candles must be a maximum of 5% of the total candle size. You can tweak that here. Then we have the max doji wick size versus the other wick. So if one wick is greater than 2 times the size of the other wick, then the doji is considered invalid because that means it looks something like this. And this is not considered a valid doji by the script. We need to see something more like this, where the body is in the middle of the candle and represents an indecision pattern. So this setting here can tweak how the script detects that. Next up, we have our exit settings. So this is for governing our exit reasons. So I'll jump ahead to the exit reasons and come back to these settings which govern the parameters of our exits. The first exit reason we have here is use ATR trailing stop. So all of these settings here will overwrite your fixed take profit. So if I turn on use ATR trailing stop, reset my chart, let's turn off hammer candles and turn on engulfing candles. And now here's an example of a trailing stop trade. If I zoom out a bit, this is probably a better example. So you can see that the script is still detecting pullback trades below the 50 moving average as usual. We get a bearish engulfing candle here that meets the rules of the strategy. 1 ATR stop above the high, 1 ATR 1-to-1 target. When this bar here hits our profit target, the stop loss begins to trail. Our red line here is our trailing stop loss, and it is trailing 1 ATR above the recent swing high. So as price moves down, the ATR moves down with it to lock in profits, and it only moves into profit. That's what a trailing stop is. It's designed to lock in profits in a trending market, and then eventually our trade gets stopped out for 99 pips here on a 29 pip stop, which if you look here is a 3.38 risk reward trade. You can ignore the max adverse excursion, but the max favorable excursion was 129 pips. So we gave up a few pips here of profit, but we made a lot more than our 1-to-1 target using this trailing stop method. So that's one exit reason you can use with the script. But before we move on to the others, you do have some options here for the trailing stop. This is your ATR trailing stop multiplier. So by default, it's a 1 ATR, but you can adjust this just like the regular ATR stop loss setting. Then you have your trailing stop source. By default, it's set to high or low, but you could set it to the closing price if you wanted to. And that would change how the script trails the stop loss. So now we're trailing from the closing price. And you can see that on this trade here, we got stopped out a bit prematurely. So there's pros and cons to all exit approaches in any strategy. But the other option here is the open. So if we set that to open, then we can see how that affects this particular trade. And you can see that we have a much tighter stop loss here, but this time the trade played out more profitably. So that's something you can play around with. So that's the ATR trailing stop exit reason. Next up, we have the RSI engulfing exit, and that's where the RSI settings here come into play. So by default, we're operating on a 7 period with an 80 and 20 overbought and oversold threshold. So if I throw on the relative strength index onto my chart and I change the settings to the same as the script, there we go. You can see that the RSI went oversold here. So we entered short as we normally do with a 1 ATR stop. As soon as our 1-to-1 target was hit by price, the script began looking for an engulfing candle that occurred while the RSI was oversold. And so we exited here for 91 pips. That's what the RSI engulfing exit reason does. The RSI exhaustion exit is exactly the same, except that it doesn't wait for an engulfing candle. It just waits for an opposite colored candle. So in this case, we're short. So as soon as we got a green candle while the RSI was oversold, if I hover over the candle preceding this green candle and we look down here, you can see that the RSI was just slightly oversold at 19. And so as soon as we got a green candle on that next bar, the script exited our trade. So that's a slightly more conservative exit reason than the engulfing exit. The engulfing exit will allow you to stay in trades longer, but sometimes you might not get the exit reason, and so it's considered a more aggressive approach to managing your positions. The next exit reason we have is the higher close, lower close exit reason. So if I turn that on and wait for the script to load, same deal, we enter short here with a 1 ATR stop, and our 1-to-1 target is hit on this bar, and then the script begins searching for a bar that closes higher than the previous bar, which happened right here on this green bar, and we exited for 91 pips. And it's obviously the same for long trades, but in the opposite direction. We're looking for a lower close candle that closes lower than the previous bar. And so this is just an approach that allows you to stay in moves a little bit longer and is definitely more suited to markets with strong momentum. The next exit reason is the same as this one, the high close, lower close, except that we need 2 in a row. So high close, lower close times 2 means that we need 2 bars to close higher than the previous bar in a row. So that's just a slightly more aggressive exit reason. And it's more aggressive because it means you are likely to stay in the trade longer than if you're just waiting for a single high close candle. And so that's for traders who want to shoot for a larger risk reward profile and don't mind withstanding a little bit of pain in exchange for the chance that the market continues lower after that single higher close candle. Now, the second last exit reason on this list is the EMA breach exit. So if I turn that one on, this one's pretty self-explanatory once you see it in action. So same entry reason as always, bearish engulfing candle, 1 ATR stop. Once our 1-to-1 target is hit, the script begins monitoring or waiting for price action to break and close above our main moving average. So in this case, we've got the 50 EMA here. As soon as this candle closed above the 50 EMA, the script exited our trade for 88 pips. So this is more of a trend following technique for traders who prefer trend following rather than trend continuation, where you might be a little more conservative with your profit taking. This allows you to stay in moves longer and you get a much higher risk reward profile, but a much lower win rate. And so it really depends on how you like to trade, whether or not you would use that exit reason. Personally, I'm not a fan of it because I like to take my profit more conservatively, but I included the option here for those of you who prefer the trend following approach to trading. And then the final exit reason here is use pullback origin exit. So if I turn that on and we zoom in on this trade here as a good example, I don't know if you noticed that, but if you look closely, you can see that our profit target has extended slightly. We are now placing our profit target at the bodies of the pullback origin. And so we have our 1 ATR stop as usual from our entry to our high. 1 ATR above that is our stop. And then our profit target is set at the pullback origin. Now, one problem with this approach is that the script does not discriminate between pullback origins. You can see that this setup here has a 3 pip target and a 29 pip stop. Personally, I'm not a fan of inverse risk reward profiles. I don't like risking more when I'm wrong than I make when I'm right. I prefer the other way around. I prefer to make more money when I'm right than I lose when I'm wrong. But for those of you who prefer a much higher win rate, this approach is has an extremely high win rate and decent returns, but we have a 0.4 risk reward profile. So we're only making 40 cents on the dollar for every time we take a trade and it wins versus when it loses. So that's not ideal. But if you still want to use this approach of taking profit at the pullback origin after your entry, but you don't want an inverse risk reward profile, you can use the minimum risk reward to pullback origin filter. So if I set this to 1, all of these trades will disappear because the risk reward profile to the pullback origin is less than 1-to-1. So if I come back to this trade here that we first looked at, if I throw on my profit tool, my P&L tool here, my short P&L tool from our entry down to our target, you can see that we have about a 1.2 risk reward profile from our entry to the pullback origin. So the script considers this setup valid. There are markets and timeframes that this is profitable on. It's not profitable on this particular market and time frame, but I included the option because it is a viable way of trading pullbacks if that's how you like to do it. So that's it for our exit reasons. I definitely encourage you to play around with these, do some back testing and see what works best on the markets and timeframes you like to trade, assuming you're not comfortable with just a fixed target like the default settings. But now let's move on to our filters. So here is our time filters section. This is pretty self-explanatory. By default, we are trading on all days, but if you want to turn any of these days off, you can. So today is Friday here in Australia. If I click on Friday and turn that off and reset my chart, all of the price action that occurs on Friday will be red. Now, it's still early in the morning here, and the time is based on the exchange. And the exchange that I'm trading is a foreign exchange market, and so it's still Thursday night in America. And so it's not drawing the filter onto my chart. But here you can see that last week, this was last Friday, the script turned red, and it does not take any trades that occur within this red period. So for example, here was a valid trade. If I turn Friday back on and click OK, this trade comes back. So that's pretty self-explanatory. Some days are more profitable than others, and some days are not profitable at all. For example, Mondays tend to be pretty slow for me, so I usually turn Mondays off on intraday strategies. But by default, all of these days are enabled. Next, we have our use time session filter. So this applies to all days and is just a time session. So if you enable this, whatever time session you pick here will turn red on your chart, and the script will ignore any trades between that time session. So for example, if I don't want to trade from 6 a.m. to 10 a.m., I can set that up like that. And now any of these red zones are ignored by the script. And then the final time filter we have to work with here is our date filters. So this is our start and end filter. So by default, it's kind of disabled only because I've set the start filter so far back. If you load up a market that has price data that starts beyond 2000, the 1st of January 2000, then it will ignore any trades before that time. So for example, if I set this to start filter, let's say the 1st of January 2021, and I set the end filter to, let's do the 10th of October. If I zoom right out, actually let's go to a 4-hour time frame. Here we go. So this is the 1st of January 2021, and any trades that occur before that date are ignored by the script and the chart turns red. Any trade that occurs after our end date, the 10th of October, is also ignored and the chart turns red. So those are all of our date filters. To disable them, just set this to a really far back date and set the end filter to a really far away date. And let's move on to our lookback settings and miscellaneous settings. So the lookback settings are, again, self-explanatory. The first is our lookback for swing highs and lows. This is used for our trailing stop loss primarily, and a few other candlestick pattern detection techniques. The script is designed to trade swing high patterns, so fractal patterns. We're looking for the tops and bottoms of pullbacks, and so any candle pattern that does not meet that criteria is ignored. And this lookback setting can be used to tweak how the script searches for swing highs and lows. And sorry if you can hear that in the background, it just started raining here pretty heavily, but I need to get through this video, so I'm going to keep going. The second lookback is our MA breach lookback. This isn't for our exit reasons. This is for our EMA invalidation. And what I mean by that is, it's for this setting here, our max candles beyond MA. By default, we can only have one candle maximum close beyond the moving average before our entry pattern can be detected and considered valid. This MA breach lookback period here is how far back we look for that breach. So by default, we're looking back 5 bars for any moving average breaches. So here, for example, here is a trade that the script ignored because we had too many candles closing below the moving average over the past 5 bars. So that's what our lookback settings do. Next, we have our miscellaneous settings. So you can set the ATR length. This is for setting your stop loss. You have the point allowance setting. I'll explain what this does. I couldn't think of a better word for this. The tooltip here explains it in a little more detail, what it does. But the best way to explain what this does is to show you. So let me go to a market example of what this setting does. So here I am on pound yen on the 4-hour chart. And look at this setup here. This, to the naked eye, looks like a valid engulfing candle setup. And this is a setup I would trade in my manual discretionary trading. But the problem is the script doesn't detect this as a valid setup because it doesn't technically fully engulf the previous candle. If I zoom right in really close and I put a horizontal line at the close of that previous bar, this green candle here opens 1 point above the close of this previous bar, and so it's not considered a valid engulfing candle by the script because the script is dumb. It only does exactly what I tell it to, and it doesn't know how to use discretion to know when a setup is close enough. And so I added this point allowance setting to the script. If we come back down to that and I set that to 1 point, this setup will now be detected. So what this setting is doing is it's allowing this engulfing candle to be considered valid even though it opened 1 point above the close. If I set that to 2 points, then it would allow a 2-point gap from the close and so on. So the purpose of this point allowance setting is to correct for micro gaps on certain data feeds. So if you're trading through Oanda, for example, that brokerage service very rarely has gaps in its price action just from the way its data feed works. Here on Global Prime, we do have micro gaps that occur on some markets. And so that's what that setting is for. And this setting is disabled by default if that's not something you want the script to do. Next up, we have overwrite new stops and targets. This is purely for backtesting. If I turn this on, the script is now going to detect, or is going to overwrite old trade profit targets with new trade profit targets and stop losses. So for example here, this trade was detected, here's its take profit, but before its take profit was hit, a new trade was detected. And so this trade was overwritten with this trade's stops and targets. Now, our backtester system isn't going to be accurate with this. These two data displays are going to be inaccurate because the script is not designed to be actually traded this way. This is purely for backtesting. So if you're going to turn that setting on, make sure to turn these two off. And the reason I added this is because when you're manually backtesting strategies, there may be times when you cannot trade. Maybe you're at work, maybe you're asleep, maybe you're at university, whatever it is you do, and you can't take certain trades. By turning this setting on, the script will show you all of the valid setups that occur, regardless of whether or not you could have taken it. And then you can use your discretion during the manual backtesting process to determine whether or not you could have entered certain trades. But by default, that is turned off to avoid confusion. So let me turn that off again. The next setting is round stop loss size. This is purely for display purposes, just to make backtesting easier. If I move this out of the way and I turn this off, just keep an eye on our labels here. Now it's showing the exact pip amount rounded to 2 decimal places. If I turn this on, it just rounds it into a whole number. So that's just purely for backtesting. It makes it easier to enter that information into a spreadsheet. Finally, we have our use EAP stop loss algorithm. This is the final miscellaneous setting. What this does is it slightly tightens up our stop losses. So this is intended for use on higher time frames. So if we go to a 4-hour chart here, and we'll see if we can find some examples. So here we are on the pound dollar 4-hour chart, which has quite a high ATR. This is going to be a good example of what the EAP stop loss algorithm does. If I come back down to it and I turn it on, keep an eye on our stop loss pips when I turn this on. Notice that it shrinks a little bit. Turn it off, our stop loss widens a bit. Turn it back on, shrinks a bit. So the purpose of this EAP stop loss algorithm, I'll open up the source code to where this is calculated. So here is the source code for calculating the EAP stop loss. You don't need to understand what this code does, but this is the easiest way I can think to show you. So this EAP calculation takes in the ATR as an input, and then it checks if the ATR is between 20 and 30, then it returns 20. And then this is our stop loss distance. So it basically rounds the ATR down based on certain brackets. So the next bracket is if the ATR is between 30 and 50, then it sets the ATR to 30. If it's between 50 and 100, then it sets it to 50. So if the distance from our entry to the swing high was going to be 90 pips, then this algorithm will shrink that down to 50 pips. So it will only add 50 pips to the high instead of 90 pips to the high. Now the purpose of this EAP stop loss algorithm is for trading the pullback strategy the way that Stephen Hart, the creator of the strategy, trades it. So if you're an EAP student, if you're a student of Stephen Hart from thetradingchannel.net or his YouTube channel, The Trading Channel, then you'll know all about this and I don't need to explain it. If you are not a student of Stephen Hart's courses, I would just recommend not using this setting because it might be a bit confusing. But basically, this is just a way to slightly reduce your stop loss size on average, which in turn allows you to have a slightly larger position size on average and leads to greater profits over the long term on certain markets and timeframes. By default, this is disabled, so you don't have to worry about it if that confused you and you're not interested in using fancy stop loss techniques. So let's go back to Euro Dollar and I'll go over the final settings here in the ultimate pullback indicator. So I went over this at the start of the video, but here is our Backtester settings. This is where you set your starting balance and your risk per trade for our custom Backtester system down here. So if I wanted to, I could set this to 100. Let's set it to $125,600. Now our starting balance will be this number, and that affects our return dollar amount. And then of course we can change our risk per trade for the Backtester. If 9% is too much of a drawdown for this account balance, you could set it to say 0.5% per trade and see how that affects your return and max drawdown. But I'll leave these back as they were and we'll look at the AutoView Oanda settings. So I'll do separate videos on Oanda and on PineConnector, but this is where you set up your automation settings for using AutoView, and you can customize everything here, your account balance, your account currency and risk per trade, all of that stuff. And same with PineConnector here, you can set your license ID, your risk per trade, your spread for limit orders, things like that. But again, I'll go over this. I'll go over these settings in more detail in a different video because this one is already long enough. And I'll need to show you how to set up these services, which not everyone will want to use. And so I'll leave it outside the scope of today's settings guide. So that's basically it for the ultimate pullback indicator. There's a lot to cover there, obviously. Finally, before we wrap this up, I'll just cover the ultimate pullback strategy, which is a companion script to the UPI, the Ultimate Pullback Indicator. Let me reset the settings on both indicators. There we go. They should be pretty much identical now. So the strategy version, the main advantage of the strategy version is it draws the pips straight onto the chart. So on the indicator version, there's a limit to how many labels you can have on the chart. On the strategy version, there is no limit. So this is a great backtesting tool. The strategy version of the script is a great backtesting tool. It makes it really easy to enter this data into a spreadsheet. All of the settings are the same. There are some settings that are removed from this indicator just because they don't make sense to be here. The Ultimate Pullback Indicator version that I was just showing you is the preferred version to be using. It gives slightly more advanced information than the TradingView backtester system does. But keep in mind there will be slight differences in how the scripts perform. The backtester system in TradingView has a couple of little quirks that I found really difficult to simulate in my own indicator code. And so, for example, you notice here, if I turn on the UPI, we have a 58.85% win rate over 384 trades. If I open up the strategy tester, we have 387 trades and a 58.91% win rate. Now the code between these two scripts is almost identical. Certainly the setup detection code is identical. And so I don't know why the strategy version took 3 extra trades and has a slightly different win rate. But the metrics are close enough that I'm not too bothered about that. You should always do your own manual backtesting anyway. The TradingView strategy tester is renowned for being inaccurate, especially on certain markets and timeframes and using certain settings with your scripts. So do not depend on the strategy tester to tell whether or not a script is profitable. Do not depend on my inbuilt tester either. Make sure to do your own research, do your own homework, do your own testing. The purpose of this indicator is not to shortcut the backtesting process and make it so that you don't need to do it. The purpose of this script is to help you backtest a lot quicker and be more efficient about it. So the Ultimate Pullback strategy has all the same settings here that we just went over, including PineConnector and AutoView. You can automate the strategy version of the script if you want to. It doesn't really matter which script you use to set your alerts. To set your alerts, you just select the script, and the UPI has a lot more alert settings here. I'll go over the alerts in a different video, but here are the unique alerts you can set for the Ultimate Pullback Indicator. If you want to trade through a third party like PineConnector or AutoView, you'll need to select any alert function call and put in the appropriate webhook. That's all you need to do in order to automate this script. It will handle everything else for you based on whatever you set up in the settings menu for these services down here. And that sums up the user guide for this script. If you'd like to find more information on the Ultimate Pullback Indicator, including information on how to start your 1-month free trial to test out the indicator in depth, head to upi.theartoftrading.com. That'll redirect you to my course website where you can find more information on my digital child, my pride and joy, the script that I have sunk hundreds, maybe even thousands of hours into over the past 3 years. Take care. Best of luck with your trading. I'll speak with you soon. Have a great day.